addressing the U.S. agricultural trade balance. In fact, it's an imbalance. That's what we're talking about in this episode of the Business of Agriculture. Hey, Damian Mason here with a question before we hop into this episode of the Business of Agriculture. If you farm for a living, you employ a lot of amazing technology, from your inputs that you put into the soil to the tractor that you sit in, your combine, and the amazing data that it harvests. But has your soil analytics kept up technologically with everything else in your farming operation? I would venture to say that no, it is not. Sure, you check for your nitrogen, your phosphorus, your potassium, your micronutrients as well. But what about disease pressure? Do you know what diseases and what pests you're going to face next year? No, you don't. But you can now figure that out with Pattern Ag's predictive analytics. Think about it. They can tell you now with testing what the likelihood of facing nasty diseases, things like cyst nematode or sudden death syndrome, what the likelihood of you having this in your field. Then you know how to prepare, how to treat, and where to invest your money. It's using technology to make you bigger yields and therefore make you bigger money. Go to www.pattern.ag to learn more. They are pioneering the way in predictive agronomy. Hey there, welcome to another fantastic episode of the Business of Agriculture. I've got John Newton. He is a returning guest. He's been on the show a couple of times. He's a friend of the show. And in fact, he actually wrote an endorsement for my book, Food Fear, 4.5, 5 years ago. John used to be at the Farm Bureau. Now he is the on the Republican side, the chief economist for the U.S. Senate Committee on Agriculture, Nutrition, and Forestry. He's got some really good stuff. If you don't keep up with him on LinkedIn, he puts some really good graphs out there and explains agricultural economic issues and why it matters to you. So what we're talking about is there's an imbalance, and maybe you knew this, maybe you didn't. Most of us that work in agriculture are like, hey, man, we make so much stuff here, 340 million people. We produce enough food for more than 1 billion. We ship stuff all over the world. We do. But we also ship stuff into our country. So our trade imbalance is now negative $32 billion. That's right. We brought in $32 billion more than we sent abroad in the most recent record keeping. John is going to address that with us. So this kind of surprises people. I noticed you even said on your LinkedIn post, this probably surprises people. Talk to me about this imbalance. $32 billion is a lot of spread, and it doesn't happen on corn and soybeans. It happens mostly on specialty crops. So we can get into all of that, but talk about the imbalance. Is this as big as it's ever been?
This is as big as it's ever been. Negative $32 billion. I think last year it was just over, $16 billion trade deficit. But, 4 out of the last 6 years, we've had a negative trade balance for U.S. agriculture. And you can go back nearly 60 years. And those are the only 4 years that we've had a negative trade balance. You're right. I don't think a lot of people recognize that we did have a negative trade balance in agriculture, but it's primarily driven by horticultural products, which include your wine, your spirits, your fruit and vegetables, your tree nuts. And then sugar and tropical products are also contributing to the trade deficit.
So we didn't have, because if you'd have asked me 10 years ago, I'd have said, yeah, we send more stuff overseas than we bring stuff into the U.S. on a dollar basis, on a value basis, right? And that was the case until 6 years ago. And that's why you said 4 of the last 6, we've been in negative territory on agricultural stuff. But for the decades before that, we were more of a net exporter than net importer.
Yeah, absolutely. I think what we've seen the last few years, a huge surge in the import of horticultural products. And when you think about it, avocados, for example, we have a $2 billion trade deficit on avocados. Americans are eating more avocados than ever before. Tequila, we have a $4 or $5 billion trade deficit on tequila. Imported beer, Modelo, Corona, you have a $4 or $5 billion trade deficit there. On some of the horticultural products, we have a trade surplus. People like Kentucky bourbon around the world. So there are some items where we have a surplus, but it reflects our consumption patterns. It reflects the strong dollar, our ability to buy those products with a strong dollar increases our demand for it. So there's a lot of factors that contribute to it, but it's certainly a concern, I think, for agriculture, because you used to brag. Agriculture's always bragged about being at least one of the sectors in the U.S. economy that contributed to a positive trade balance. And you can't really say that anymore, especially when you hit a record trade deficit as large as it is, and we're not actively pursuing new trade agreements around the world. So it's getting more competitive for our agricultural products in places like China, and we're importing more and more every single year. So it's certainly a concerning trend when you think about the importance of agriculture, the importance of exports to the rural economy across the country.
John, the negative 32, that's for 2023 or that's projected for 2024?
Projections for 2024.
Okay, so we're projected to be at negative 32 billion. And just for the person that's listening to this, because we have all types of listeners, the person that's driving their piece of equipment or on the road right now, and they're saying, wait a minute, I want to make sure I understand this. What we're talking about is very simply for the year 2024, the projection is that we will buy $32 billion more foreign agricultural products than we sell.
That's exactly right.
So I know that, obviously economics is your job and it's my degree, but there's other people like, they hear the thing about deficit. What's that mean? And I don't want to have any way talk down to anybody, but I want to make sure. Now, on the one hand, it's not like, oh my God, we're going to, we're cratering. We're never going to make it. We have a negative trade deficit in a lot of things, here in the United States. Almost all electronics, the computer that you and I are talking on right now was not made here. I mean, there's all these kinds of things. Mm-hmm. So we run that, and that tends to be the case with dominant, large, developed, mature economies. Oftentimes have categorical trade imbalances where they buy more than they sell. But it's unusual that the United States, you can say 1 year does not a trend to make. Well, 4 out of 6 years starts to sure as hell sound like a trend.
Mm-hmm. Well, it was, close to $17 billion trade deficit last year, which means we imported $17 billion more in food and agricultural products than what we shipped around the world. It's growing to $32 billion this year. One factor that contributes to it is declining commodity prices. Corn and soybean prices are lower now than where they were a few years ago. So that contributes to a lower export value and makes that trade deficit look even bigger.
Yeah, so that's the other thing. It doesn't mean that we shipped less tons of stuff. It means that the value of the stuff, cotton is down from maybe where it was. Soybeans and corn obviously are down from where wheat. So you've got on your graph where the balances and imbalances are. We're at a positive on many of these things. I mean, you look over here, oil seeds, that presumptively is canola and soybeans, right? When we say oil seeds.
Right.
Yeah. Okay. Right. Grains and feeds, obviously, yes, we were talking corn and wheat. Livestock and poultry, we're a positive $10 billion. So we're a positive $16 billion on oil seeds. We're a positive $15 billion on grain and feed. We're a positive $10 billion on livestock, poultry, and dairy products. We're positive $6 billion on cotton. And again, those are with prices being depressed on all things corn, wheat, soy, canola, cotton, etc. Ethanol, seeds, tobacco were a positive. But then we get into, you categorize it as sugar and tropical. Help me out. What's tropical mean?
Well, you can think about some of the tropical products that you import. Coffee is a tropical product. So I think that's where you get into the sugar and tropical space, things that aren't produced here on the tropical side. And then obviously we import, a lot of sugar from Mexico. You think about sugar ethanol coming up from Brazil. We import that. So that's going to be in that domain.
I knew that tropical obviously meant stuff more, produced in the tropics, but coffee, it's probably one of the biggest sectors. Obviously, we cannot grow coffee here. So that's the one thing that I guess we also need to point out here, Dr. Newton. As much as we don't like this, well, if somebody wants their cup of joe, we ain't growing that in Oklahoma. I mean, so there's going to be stuff that we can't produce, period, right?
Maybe they can make lab-grown coffee in Oklahoma or something like that.
There's a Wall Street Journal article from a few weeks ago that claimed that we'll all be drinking synthetic coffee someday. I won't be because I don't drink coffee, period. And this guy was off on the whole climate crisis agenda and saying because of climate crisis, we're not going to be able to produce coffee on trees, which I don't buy that at all. It's just more hysteria. We've been hearing that for a long time. But yeah, we can't grow coffee in Oklahoma unless it's synthetic. So
we used to have coffee out of Hawaii.
That's true. That's true. Okay.
Mhm.
Okay. So we got one of our states. One of our states can grow coffee. Okay. So answer me this: that sugar, we can grow the hell out of sugar. We grow cane down in Louisiana and Florida, and most American consumers, the sugar they consume is derived from sugar beets. Most people don't know that. And we can grow the hell out of sugar beets from Michigan to Colorado to Wyoming to Montana, Idaho, even in Southern California. There's California has a sugar beet thing. I've worked for the sugar beet people. Why do we import so much sugar? I thought sugar was one of those things that was very protective.
Well, we have an agreement with Mexico and other partners on how much sugar that we can import. USDA looks at the balance sheet for sugar throughout the marketing year. They look at supply and demand. They set TRQ levels, tariff rate quota levels for sugar. So the sugar market is very managed. And as part of that management, you do allow some imports of sugar products, primarily, again, a lot of that coming out of Mexico.
Then the big one is on your chart, and this is remarkable. It's always been that we brought in more horticultural products than we shipped. But the number, if you look at your chart, and it's a great chart, like I said, dear listener and viewer, follow John Newton on LinkedIn. He puts up great charts. Going back to, I'm looking at the chart right now, going back 30 years ago, it was a little deficit on horticulture, like a couple $1 billion. Now it's $61 billion of negative on the horticulture. You attribute some of it to avocados. I assume that's in that space?
Yep.
The browning of America, and the fact that the avocado people tell me consumption of avocados was like half a pound per American per year 20 years ago. Now it's like 17 pounds per American per year. Isn't it some crazy thing like that on how much avocados get eaten here?
Well, in my house, it's probably even higher than that. My daughter loves avocados, but it's people want watermelon year round. We don't grow watermelon year round. They want strawberries. They want, all the fresh fruits and vegetables. They want to have that year round. And A, we don't grow it year round. And then B, labor is so much cheaper outside of the United States that you can produce a lot of that and import it. Really hurts our domestic producers, our domestic markets when they're undercut like that. But that's another reason for it is, you can produce that stuff in Central America and import it in the United States at a price that's much more competitive at the grocery store.
That's where I want to go next is it a problem and what battle should we fight? That's where we're going to go next. Before I do that, I want to talk to you about making money off your property. If you're a property owner, if you're a farmer, you know what? You should be thinking about that in a year like 2024. And we're just talking about trade deficits here. Well, also, we've got lower commodity prices. Agricultural revenue is set to be down 40% from 2 years ago. What can you do to diversify your income? Well, if you have property or if you're a farmer, you know what you might do? Look at TrueTerra. TrueTerra is focused on supporting farmers at every stage of the sustainability journey to help you make and maintain regenerative management practices that will improve your agronomic as well as your economic sustainability. The point is you can make money for things like strip till, reduce tillage, cover crops, and all of a sudden you've got now diversification of revenue. You should really consider doing this. Go to TrueTerraAg.com. TrueTerra is part of the Land O'Lakes company. TrueTerraAg.com to learn more. Should we fight this? Should we intrinsically, you and I are Americans. We still question your loyalty because you're an Ohio State guy. But aside from that, we still, as an American, you don't like the idea that looks like we're losing. When you hear trade deficit, trade imbalance, it's like, damn it, we're losing. Are we losing and does it matter?
I think it's a matter of perspective, for especially crop growers across the country that see their wage rates, if you're using H-2A, agricultural guest workers, and your wage rate is incredibly volatile, incredibly unpredictable. That's a challenge to running your business, to finding workers when wage rates are so high. And our competitors around the world don't have those same challenges.
Right.
We have a very tough regulatory environment that our competitors may not have. So I think there's a number of factors that make doing business for some of our farmers a lot more challenging than it needs to be. And we hear from farmers and ranchers. They come in, they talk to senators on Capitol Hill about all those challenges, whether it's dealing with too many regulations with the EPA or the adverse effect wage rate in the H-2A program. All these barriers to having a successful business is one of the factors that's hurting them.
Yeah. So, and you're on the Republican side, which tends to be more small biz friendly, whatnot. There's the regulatory environment, meaning it's generally environmental stuff, from water to usage of products, whatever. And then there's the reality of the labor. So let's take up regulation first. Does it ever get better? I mean, I had a guy on a year ago on this show, and he's a pepper guy. And he's continuing to expand operations in Mexico from his native California. He's a California guy, but he said, I just can't continue to produce and make such small money on my stuff here in the United States because the regulation of labor. So he was moving operations to Mexico. Unfortunately, that's what happens. We create regulations and we end up offshoring our stuff. We see this again and again. Is there any stopping it?
Well, obviously, I think a lot of eyes are on the election, in November, and is that going to change the regulatory environment? I would expect it does. We've seen the regulatory environment change a lot under this administration. They've regulated through the executive branch, so I think that yes, it can change with a different president, different executive branch.
Okay, so you are optimistic that if the election goes a certain way, meaning it goes to the right, we will stop having a prohibitive of regulatory environment. Now let's talk about labor. Good God. You and I can agree on many things. And my wife said, Damian, you're always ahead of the curve on stuff. They started using the word transitory 3.5 years ago. And after I heard it and saw it in the media 5 times, I'm like, I guess they're making up this word transitory to mean temporary, because we never used the word transitory in any economics class I took. And I said, bullshit. This isn't temporary. I said, when they blow trillions of dollars of government money out the door, which creates inflation, the idea that we're going to make it temporary, I said, so's cancer. Cancer's temporary until it kills you. This inflationary situation, John, is not going away. Therefore, labor rates are not going to decline. They almost never go down. Hell, they might not even stagnate or plateau. I don't see this being a good situation at all for the American specialty crop producer who needs hands, needs manual labor. I don't see it being a good situation. Am I right?
Well, I think they've been advocating for years to find some sort of solution on the adverse effect wage rate. It's gone up dramatically. Every single year it goes up, outpacing inflation, outpacing wage growth across the broader economy. So it's been a challenge for specialty crop producers for some time. I think that's one of the reasons you're seeing the investment towards mechanization. Yeah, because and you saw it on the dairies. They have robotic milkers now. Just finding access to labor, and it's across all of agriculture. When I was at the Farm Bureau, they talked about one of their biggest concerns was finding somebody to show up for work the next day on the farm, and it didn't matter what kind of farm it was. These are jobs that, for some reason or another, regular Americans don't want to do these jobs, and so it's challenging.
We've been hearing this for easily 20 to 30 years, I would say. This is not a new thing. It's been going on, for at least 20 years. All right, so answer me this, though. By the way, do you agree? Is transitory a word that just got made up 3 years ago? It was never used in economic vernacular before that.
I'm from Kentucky, so my vocabulary was already a little limited, so.
All right. What about on the front of this labor thing? I asked Arlen Suderman, he's the economics guy with StoneX. I asked him in a recording that we did last year. I said, "Is the government so smart that they're creating this immigration disaster, bringing in millions of these unskilled laborers to create a supply for us?" And he said, it'd be great if you thought that the government was smart enough that behind this disaster, there actually was a plan. There's not. All of this immigration, they're largely unskilled, completely unvetted. We don't even know where they're coming from in many cases. Does this end up being a net positive for agriculture? Do those people that are right now, I don't see it happening. When I read that 168 of the hotels in the New York metropolitan area have been converted into migrant shelters, I don't see them ending up in Florida picking strawberries. But am I wrong? Does this net result of this migrant situation end up being good for the labor that we need in things like horticulture?
I don't think I've really thought about it to that extent. I think people are leaving bad opportunities, bad social and economic environments in those countries to find something better for themselves and better for their family here in the U.S. And unfortunately, they're not doing it the right way. But that's the reason why they're coming here. What effect that has on the agricultural labor supply, I have not really thought about that to a large extent. But you do see it. It is a problem. There's a lot of folks coming across the border. You have no idea who they are. You have no idea where they've gone.
But do they end up? I mean, if you're a pure economic guy, you say, opportunities find each other, supply meets demand, demand creates supply. You can go through all these kinds of theory or real world scenarios. Ultimately, it should mean that these largely unskilled, poorer people will find an opportunity, working on a farm. But I don't know that's going to happen as long as there's a welfare system that sends to be giving them shelter, and converting the Courtyard by Marriott into a homeless shelter is probably not exactly the motivation to go and do that. So I don't see it actually being a net positive, unfortunately.
Yeah, immigration is certainly a big challenge for this country and this Congress and this administration.
I want to talk about the government side of it also, since that's where you are now. Before I do that, premium plant nutrition with the added benefit of biostimulants. Okay, I want you to think about this. We've got a whole new world out here in terms of crop production. We know that there's biostimulants. We know that there's a whole bunch of stuff happening in the soil that we never even considered 10, 20, 30 years ago. You know what? We've gotten a lot better. We've gotten a lot smarter. So what if you can get premium plant nutrition with the added benefit of biostimulants? No one does it better than Redox Bionutrients. Redox Bionutrients, a family business in Idaho. It's helping farmers and growers succeed across the United States and even internationally. Redox has a special pallet program for Midwest corn, soybean, and wheat growers, providing breakthrough nitrogen optimization with RDXN. That's one of their products, in addition to two of their flagship products, Banks and Mainstay. You can find out more at redoxgrows.com/Midwest. redoxgrows.com/Midwest. I'm wearing a shirt right now. Check it out. Go to redoxgrows.com. Regulatory, et cetera, that's happening out there. Is there an initial reaction when we say, good God, we've doubled the trade deficit on agriculture in 1 year, we better do something? What's the call? What is being asked of you?
Well, first and foremost, we're working on a farm bill reauthorization right now. And all of the stakeholders that have come into our doors, what they've said is they'd like to see more money in our foreign market development and our promotion programs for agricultural trade. So we spend about $200 to $250 million a year in trade promotion efforts, but that hasn't changed in over 20 years, since 2002. Okay. Inflation's hit those folks just as hard as everybody else, so they'd like to see more money go into trade promotion efforts. We need to go out and find and develop those new markets. We need new trade deals so that we have better market access around the world. We need to, on common food names, we've got some challenges with the Europeans on, cheese names, for example, Parmesan or Asiago, those create challenges for U.S. farmers and U.S. businesses. So there's a lot of issues.
Speak to that. Wait. I understand. Okay. The labor thing, the fact that foreign countries can grow watermelons in a different season, that makes sense to anybody. Labor rates being more here prohibitive compared to, everybody understands that. Cheese names? Back it up here a little bit, buddy. What the hell are we talking about? Cheese names. Why is that a problem?
Well, you can produce a Parmesan here in the United States, but you can't sell it in Europe and call it Parmesan.
Oh,
the craft green container. Because in Europe, they have geographic indicators, I believe. So champagne has to be produced in a certain part.
of France. Yeah, right. So I
Yeah,
didn't know
yeah,
that
yeah.
on cheese. So in other
Yeah.
words, do, do you think it's a name that we could sell more dairy products abroad if there weren't those regulations? And also, we can't do anything about that other than try and retaliate because those are their regulations, not ours, right?
It's a barrier to trade. It's a non-tariff barrier to trade to keep U.S. dairy products out. I mean, that's as simple as it is.
Right. So anyway, the point is, Europe has a dairy business as well. Now, granted, in the Netherlands, which is one of their biggest dairy producing countries, they're trying to put it out of business with bogus environmental climate crisis regulations. But do you see us growing Europe as a trade partner for agricultural stuff? Because they tend to be pretty protective.
They do tend to be pretty protective. I think time will tell. I think we continue to work on it. Trade barriers or trade should be about the science, and right now it's not about the science. Artificial trade barriers with food names is an impediment.
Okay, I'm gonna go ahead and just be the guy that says the truth teller. From the first time I read about trade in 1988, I think when I was an ag econ student at Purdue till to now, I don't know that it's ever been about. Generally, it's worked out. We've got really good array of products and we've got really affordable products. We've got good quality products. So in general, it all works out. But policy has always been bastardized. There's always been protected classes of commodity products. There's always been favoritism, if you will, and there's always been a whole bunch of griping. So I don't know that this is anything new. Is it worse now or the same or better than it was years ago?
Well, would you say 1988? I was 6 years old, so I can't speak. I can't speak about what it was like back then. But no, I've been doing this kind of work for close to 20 years, and it's been there the whole time that I've been working in this space.
What about the reality that some of this trade imbalance is coming from stuff that, frankly, we didn't have a few decades ago, and it's just going to be the reality. Americans want avocados. They want avocados for their Super Bowl parties. To get avocados in February, it's going to become from offshore, or it's going to be coming from a foreign country. There's some acceptance of the fact that that's always going to be the case. Can we expect to make up for it with the stuff that we're really darn good at producing? We can produce pork in Minnesota in February like nobody's business. Can we make up for it? Can we balance this thing, getting closer back to a even trade balance by ramping up pork and soybean and all that, or have we tapped out what the globe can take?
I just think the globe is more competitive. For years, our market share in major categories like corn, wheat, soybeans continues to diminish. We're going to see increased competition out of Brazil and South America. That's not going away. It's more competitive for their second crop corn, as you know.
Yep.
We're putting more of our soybeans into, biofuels. So it's hard to tell. I think there's a willingness and a desire to continue to grow as an exporter around the world. I mean, dairy products, for example, have grown considerably over the last decade. You mentioned pork products, poultry products. I mean, exports are so critical to the success of the farm economy because it's that marginal unit. It's that last unit that you're getting over the finish line that helps to drive the value. If we're not exporting it, it's a surplus. It's heavy on the balance sheet, and it drives down prices. So it's critical that we maintain those markets, that we're around the world developing and promoting those markets. Senator Bozeman, my boss from Arkansas, he travels around the world. He does a lot of work, with the military, with the Air Force. And, he was in Singapore recently, and he says they can't get enough of U.S. agricultural products. They want it. But we have to be able to get it to them. We have to be a consistent and reliable trade partner. And we've got to go out and develop those markets. And that's what's really important. They want our products around the world. We've got high quality products, but it is competitive. And if we're not there, somebody else will be there.
Okay, we've I've had the position for quite some time that, for a long while, post World War II, we were the gold standard. We were great at making products, from hogs to dairy to corn to soy to wheat to, whatever. And then, like you said, it got more competitive. Somewhere around certainly the early 2000s, 20 years ago, it started getting real profitable. India learned how to get better at ag, and Australia. And obviously, we know what happens in South America, Argentina, et cetera. So if that's the case, we're not going to lose the competition. It's just here. So I'm not sure that it's reasonable, and I'm not in any way being a naysayer. I don't think it's reasonable to expect that somehow we get back to what it once was, only because there's a lot of other countries that have gotten pretty good at making stuff also.
They have, but we still have a breadbasket here that a lot of countries don't have. That's our competitive advantage here in the United States. And I think you still look at how many people we're going to have to feed by 2050, whether you think it's 9 billion or whatever that number is. They all live outside of the United States. 2% of the world's population is here. So if we have an opportunity to send our products around the world, we just have to have balanced market access.
Yeah. I guess
barriers to trade.
I point out that the population stuff that we've been hearing forever is misguided. We're not going to have huge population, but one thing that we do look like we're going to have is a better eating population. The caloric consumption per day in most of the world is up considerably from what it was a decade, 2 decades, 3 decades ago. So in general, they're a hungrier. I don't think there's going to be 11 billion. My people know that. I say it all the time, though. But they're going to eat better, which bodes well for us. John, we're talking about.
And that's the first thing you do when you get more money is you improve your diet. As economies grow, as people have per capita wealth grows around the world, they're going to improve their diets.
Well, look at you. You're a muckety muck in Washington, D.C., and you probably had to get bigger jackets by 2 sizes. I mean, you're just out there. You're out there. Working in the. Is it fun working out there, or does it get to where it's like stressful? What do you think?
This is one of my favorite jobs that I've ever had. I enjoy it. It's the people, right? I mean, you work with farmers all the time. To have farmers and ranchers and conservationists and foresters and your hook and bullet folks that are coming in to Washington, D.C., talking about what's happening back home, how policy's impacting them back home, and then there's an opportunity to maybe change things, to do something that's helpful to them in their favor. It's pretty rewarding, to work for Senator John Bozeman out of Arkansas. It's definitely the highlight of my career so far.
All right, so you've been in this role now for a couple of years, I think. I want to talk about China. Whenever we talk about trade, you and I have not been in an agricultural discussion. We have not been to an agricultural meeting for a long, long time where we don't say the words trade China. You and I haven't even talked about China. Our imbalance, this $32 billion deficit that we're going to run projected for 2024 is not because of China. They still buy our pork. They still buy our soybeans. This is not. And then as far as where the horticultural, we get some of that stuff from them. Where's China factor into this?
One of the areas that China factors in is they're not buying as much from us as they did, in 2021, 2022.
Yep.
And that leap, when they came in as part of the phase 1 agreement, they started buying corn. I mean, they weren't big corn buyers from the United States for years. And then all of a sudden they bought a record amount of corn. Well, that came after 2019. We had nearly 20 million acres of prevent plant. Mm-hmm. The corn balance sheet was already tight, and China came in a big way and bought corn. And that contributed to, higher corn prices, which lifted our export value. As China's backed off, we're not exporting as much, have a heavier balance sheet, and prices have come down. So China does have an effect there. If they were still buying like they were 2 years ago, we'd have corn that be, $7-8 a bushel, and our export value be a lot higher. So I think China does play into that.
Okay, well, then here's the other next question. They're not going without corn. They didn't stop eating. They didn't stop feeding their pigs. Now, granted, they've got a few less pigs because of African swine fever, decimated part of their herd, but they're not going without eating. So what changed? Just the rest of the Brazils of the world started ramping up corn production and putting it on ships to China?
You know, I might be wrong here, but I'm pretty sure China might be the world's largest corn producer.
No, it's still us. It's still us. They've been climbing. They became number 2.
They're pretty close.
Yeah, right. Still.
But years ago there were concerns about what's the quality of that corn that was in storage in China.
Yep.
And I recall folks thinking maybe that corn wasn't the best quality, and that was one of the reasons they came in. The Phase 1 agreement under President Trump was another reason they came in and bought a lot of corn. But they've shifted back into their previous buying pattern. They were not big buyers of U.S. corn. They would shift into grain sorghum, then they would have issues there. They prohibit sorghum purchases from the United States. So they're an inconsistent trading partner, but they're a big trading partner.
Well, and also on the verge of criminal, and they don't follow any rules, and they also want to destroy the United States of America. But that's a story for a different day, because I'm exceedingly anti-China. If I run for political office, it's going to be on an anti-China platform. Or if I try and get the Secretary of Agriculture slot, it's going to be on an anti-China platform. One thing about China, they still are buying our stuff, and the trade imbalance is not due to them per se. It's just that commodity prices have come down. That's one of the things. And a lot of the commodities we produce are lesser priced. Is there an opportunity, Professor Newton, is there an opportunity to team up with developing countries that right now are where the watermelons are coming from, or are where the avocados are coming from, and do an end around on China? Because I think there is. I think the answer is, we know that China doesn't want to be our customer. They want to be our replacement. Why don't we work on these trade agreements instead of focusing on China like everyone in ag has for the last 20 years? Why don't we focus on these other countries that have ascending economies, and we can take their watermelons and avocados and black blueberries and whatever the hell else, and they can take our poultry and our pork and our oil seeds.
I mean, well, I think we do a lot of business in Central America. You have the CAFTA trade agreement. They're big buyers of our pork and poultry products. But
Mexico,
going back to
Mexico being the best of that, yes.
Right. But going back to the Farm Bill conversation, I mean, putting more money in MAP, which is the Market Access Program, and the Foreign Market Development Program, that money goes directly to your export promotion folks, who can go around the world and work with buyers in different countries and say, hey, here's how you can use American steak in a recipe, or here's how you can use American pork products, or American produced cheeses, or rice, or there are those efforts, and they do it in the horticulture space too. Apples. So I think it comes back to folks want to see an increased investment in some of those ag promotion programs, so we can go out and develop those markets and prove that we're reliable and consistent trading partners.
Okay, so you say we need to spend more effort on the marketing and more money on the marketing. Is there anything else that we need to do? Regulatory, we need to try and back off some of the stuff that's making us non-competitive. That's a tough one, because you're right there in the lion's den in Washington, D.C., and they don't usually get rid of laws. They like to make them. They don't typically like to get rid of them.
I think we probably need another podcast to figure all this out, or at least talk through it. I mean, there's so many challenges, but there are also a lot of opportunities. And again, all the farmers that come in through our doors, all the businesses, they're incredibly, innovative and always thinking about what they can do next to be successful. So I'm incredibly optimistic that we're going to get there, but certainly that negative trade balance has opened some eyes for some folks.
Yeah, it's the biggest it's been, right? So it's the biggest it's been, and here we are in the 4th out of 6 years, and it's as big as it's ever been. Trend line, you're an economics guy. Trend line, does it stay this way for a while?
I think it really depends on the export side more than the import side. I think the trend for horticulture is it's hard to buck decades of that trend line. But elsewhere, can you make up the ground with U.S. dairy products, with soybeans and corn and cotton? You certainly can. But again, it's you need better access around the world. You need to go out and get new trade agreements. I think if you recall, TPP, that would have been great for U.S. agriculture. And the Trump administration negotiated better terms of trade into the Japanese market. We've got good trade access in Korea. We've got, good access in USMCA. I think there's some dairy issues that we still got to resolve with Canada. So not only do we got to go out and find these new trade agreements, but we need to enforce the ones that we have too, to make sure that those who agree to trade with us are playing by the rules. And that'll help that trade balance too.
Got it. So you think the answer is enforcement of trade agreements that we have, and obviously expanding those. And then also, I like your statement. We're probably not going to stop bringing in avocados and specialty horticultural products because we just can't, or even, the tropical stuff, coffee, whatever. The answer is continue to ramp up what we can do, the stuff that we are good at making.
We can do our part, Damian. All right. I will have one less avocado. And I will have one less.
Your daughter eats an avocado a day, so I wouldn't worry about it. Let your kid have avocados. I mean, apparently she likes them. All right,
one less margarita.
Well, I don't even need to go around doing that. I mean, that's getting crazy. What'd you say the number on tequila? We've got a $3 to $4 billion deficit on tequila.
Something like that. Yeah, it's pretty large.
Anyway, all right. His name is John Newton, Dr. John Newton, Professor John Newton, friend of the show, John Newton. He's the chief economist on the Republican side for the United States Senate Committee on Agriculture, Nutrition, and Forestry. He's a good dude. He's always got great stuff. I do encourage you to follow him on LinkedIn because he puts up really cool graphics and is good about the explanatory side of what's going on and why it's happening. If you want to find him, just find him on LinkedIn would be my answer. I was going to say, otherwise, I can send him to your office and then come out and start lobbying and saying, hey, I heard you on Damian's show.
Well, if they're in DC, come on by.
Yeah, well, apparently he likes tequila. All right. Talked about addressing the United States agricultural trade deficit. Like I said, I think it's not alarming, but it is definitely piqued my interest that we didn't even have a trade deficit in agricultural products until 6 years ago. And here we've now 2/3 of the time since then been running a trade deficit, and we're going to be at the biggest we've seen ever in 2024. Got it. Till next time, thanks for being here. Thanks for being here, Mr. Professor Newton.
Thanks for having me.
He's never actually been a professor, but,
That's not true.
You were a professor, weren't you?
I was at University of Illinois a long time ago.
Yeah, which we're fine with that. It's the only thing we object to around here is the Ohio State thing, but that's also a podcast for another day.
This is the last podcast I do, it sounds
like. All right, so thanks for being here. Till next time, go check out my friends at Redox, check out my friends at Truterra, and also Pattern Ag. They are the people that bring this show to you. If you have an idea of something you would like us to cover, please get it to us. You know what? We're always trying to create great content that you learn something from. So till next time, thanks for being here. That's John Newton. I'm Damian Mason, and this is The Business of Agriculture. Hey, thanks for being here. This episode of The Business of Agriculture was brought to you by Pattern Ag. You've heard me talk about Pattern Ag because I think it's a pretty cool concept. New technology that allows you to predict the problems you're going to have and therefore treat them before those problems cost you money. What kind of problems am I talking about? Pests and disease. Things like cordon rootworm, sudden death syndrome, cyst nematode, and a whole bunch of other bad things that happen out there in the field that can cost you money. Guess what? Pattern Ag will let you find out ahead of time if the disease or the pest pressure is there, and therefore you're treating it before it costs you any money. What a great concept. Go to pattern.ag, that's www.pattern.ag, to learn more about their product, their technology, how it can make you money, save you yield, and also where you can find a rep that can come out there and do the work for you. Pattern.ag.